So let's talk about the two day trading mistakes that will absolutely destroy your account's growth when you're trading. So make sure 100% you do not do any of these at any point in time during your trading career, whether you're a beginner, intermediate, or advanced. This applies to any and everybody at any point in time. So make sure if you want to continue to make consistent profits when you're trading, don't do any of the following two things. So make sure you definitely pay attention to this. And if you're not a trader or you're up and coming, you have some trading friends, send this to them because the last thing we want for anyone is obviously to lose a lot of money. Little money here and there is fine, but a lot of money is insane. No one wants to do that. So let's save some people's accounts. So mistake number one, which is basically arbitrarily having stop loss goals, right? That's what you don't need. So what that basically means is that you don't need arbitrary percents, and instead you need to let the 5 minute chart tell you when exactly to sell. In other words, as an example, before I get to that, I'm sure you or maybe some other people are, I've at least that I've coached personally, I've coached probably over 300 people at this point in time. A lot of people come into my program and they say, "Hey, I want to learn how to trade. Look at some of the past trades I've done, et cetera, et cetera." More often than not, they usually say, "Okay, well, I wanted to earn 10% on my money in this trade right here." Okay, that's great. Okay, well, what's your stop loss? I only wanted to lose a max of 5%. Right, that makes sense from a logical perspective. But the numbers are still arbitrary because they're not based on anything. You want to lose a max of 5% and gain a max of 10%. The market said, I don't care about what you want. I'm moving where I'm going to move. And instead, as a result, you don't do what you think you deserve to get. The market is going to move where it wants to move. So as a result, you need to let the market happen and you react based on that as a result. And the trades that you get in from that reactionary type of trade or chart analysis, you either get in or you stay out. Nothing more, nothing less. What I'm basically saying is that you only sell in three ways. That means you, after you have a planned entry, you have a planned profit target, you have a planned stop loss target, or you break even. Nothing more, nothing less. That's when the chart tells you to do that. No arbitrary 2%, 5%, 8%, 1%, none of that. So, in general, what really messes people up, again, to go a little deeper on that, is adding this human element to it, which, in other words, realistically is anxiety. Because if you're looking at each little tick on every little candle as it's moving, you're going to have anxiety and you're not going to get out at that profit target, that stop loss target, or at break even because you have too much anxiety. And as a result from having a lot of anxiety, your losses outweigh your wins 9 times out of 10. So, what you need to do instead is the following. You need to have a focus on the strategy if it's a consistently profitable strategy and not focus as an example on the stop loss. Because another thing people typically do on accident really is just before they even enter a trade, they're like, okay, first things first, I don't want to lose more than 10% on this specific trade of how much money they're putting in from a buying power perspective. That's fine. That's amazing. I love the thought of that. But again, it's not what you want to do, it's what the market's going to give you. So you don't, and also on top of that, you focusing first on the stop loss in general versus how much money you potentially can make in general is the worst way of thinking. It's the whole glass half empty versus glass half full argument. You need the glass is technically half full. You need to have a profit target. You need to know where you're going so you can sell at that profit target. This is your goal. You need to have a positive perspective going forward to say, I'm entering this trade because there's profit that can be targeted so I can earn money. If it doesn't go that way, there's a stop loss target. Unfortunately, that I'll sell it, but it's much smaller. If you go in from a thought process perspective of, hey, okay, I'll enter the trade, but first things first, I'm willing to lose X percentage, but hopefully, as a byproduct, maybe, potentially, I might earn 5, 10, 15, 20%. That's the backwards way of thinking. You need to focus on profit targets first versus stop loss second, not stop loss first and then profit target second. It's just how it is, right? And then, of course, break even is there. So, again, another thing you should be basically doing from a thought process perspective and just from an analysis perspective, I'm not going to get into really too much chart analysis, but you need to do this little formula that I basically kind of made up. It's really just Candle technical analysis, right? So I'm not saying any technical indicators, just understanding what the candles are telling you. Hence, us mentioning up here, listening to the chart. So candle technical analysis plus a planned stop loss, right, equals expected results. If you follow this formula, more often than not, if as long as it's again a sound strategy, you will win and have consistent profits. If at any point in time, even people that do my strategy, they'll do this candle technical analysis, but it's basically instead of a plus, this is a minus sign. So minus, I guess, plan stop loss. So they don't have a stop loss. They let their losses way go out of control, much farther than it really should, and they don't have expected results because of that. So that's when you typically quite often may see negative 5,000 of a loss, but you put in $1,000. It doesn't make any sense. This chart told you to sell. Sell the freaking thing. It told you to sell a long time ago. So again, yes, have your candle technical analysis, which is going to give you your planned target, but also have your planned stop loss, which is the stop loss, so you won't bleed dry. So that way you can always have your expected returns. And last thing, of course, all in all, your wins will always outweigh your losses with the plan if you sell just those three ways, because believe it or not, those are really the only three ways that you should be selling. There's nothing really else to it. If you're selling in the middle because you're scared, then either you have too much money on the line that you're risking, A, or B, you for sure don't have a sound profit target that you truly believe in, not in your heart, but in your mathematical head, because it's based on the technical analysis that you see on the chart. Screw that, oh, I hope it goes down because that'd be amazing. No, forget that. It's literally technical analysis wise, right? Back to the formula, from a candle technical analysis perspective, you have that set down on the 5-minute chart and the 1-minute chart, plus the planned stop loss that you actually abide to gives you expected returns. Without either one of these, it does not work. And I'd argue that adding one more, if I did anyway, so it'd be this plus that, plus trader psychology, of course, being managed. So managed trader psychology being that you don't have this human element in there because you're following the actual three ways to sell will give you even better expected returns. So keep that in mind. But that's basically number one. Arbitrarily having stop loss goals first, and arbitrarily having stop loss goals that just don't make any sense periodically. In general, I mean, sorry, because it needs to be based off of something. That's mistake number one. Mistake number two is not understanding how exactly to lose in the very first place, which is very interesting of a concept. So winning a lot of to start it anyway, winning a lot of trades back to back for most people is literally the worst thing possible that can ever happen to them. Massive wins cause really just two things. One, overconfidence, which is basically saying you can't lose no matter what you do. And two, disbelief, which is you in the back of your brain thinking you shouldn't lose no matter what you do. So this confidence plus disbelief equals a massive loss that typically will blow up most people's accounts. And this is really how most people end up blowing their account. The last thing you really want is for you to have back to back to back to back to back trades and deep down you don't even know what you're doing. So not understanding how to lose because you don't even understand how to win because you don't have a formula, being candle technical analysis plus a planned stop loss, you're literally trading without that planned stop loss. Hence, it equals this massive loss that will potentially blow up your entire account. So before doing any trading, again, what I'm getting at is that you need to always, before ending a trade, have a planned entry, have a planned exit, have a planned stop loss, potentially planned break even, and you have to follow it. No more. That removes all of the anxiety, it removes all the FOMO, it removes so many other things because not letting go of your pride is not more important than following the plan. So I'd want to hear this actually in the comment section. Let me know. Let me know. Have you done one of these before? Have you done A or have you done B? A is losing a trade, but you close your PC and walk away in hopes that it'll bounce back. And B is scaling still into a bad trade by doubling down like you're in a casino. Realistically, we've all been there. I've done both of them my own self. So if I was in the comment section, I'd add I've done A and B. But let me know in the comment section which one you've done, and we can actually openly talk about it. I'll be happy to help you in the comment section. Depending on your answer and how detailed it is, I'll even make a video of how to help you specifically. But again, let me know. Leave a comment below. Have you done A and or B from just when trading in general? But last thing down here is that you need to understand that there will always be another trade. So just be able to move on. If you, again, do not understand how to lose a trade and admit that you lost a trade, the worst thing and the last thing you want is to be stuck in a trade that took all of your wins that you've took in maybe the past 1 week, 2 weeks, 3 weeks, 4 weeks down the drain, down the toilet because you just couldn't admit that, hey, I didn't make it. And again, the best thing you could do is just say, you know what? I'm going to sell my planned exit because I understand there's going to be another trade. So you just need to move on. But those are the two mistakes that most day traders sometimes will go into, which is mistake again, number one, arbitrary stop loss goals, which is based off of nothing, right? Just percents pie in the sky. And number two, not understanding how exactly to lose in a day trading and not being able to actually admit when they lost a day trade. The faster you can lose, the faster you can actually learn how to win.